Welcome to More Than Mindset, the only podcast that bridges the gap between spirituality and success. Go beyond the mind with clarity and confidence coach Kim Guillory and learn how to integrate your passion to serve with your skills and experience to create a business you love. Let's get started. Hello, and welcome back to the show. My name is Kim, and I am your host. And we are still talking about investment and wealth and all the different avenues that we could take to not just create more revenue, but how do we multiply the revenue? How do we keep the revenue, protect the revenue so that we can create generational wealth? So I've been working with Jana. We're both 10X business coaches. Jana has, how many properties do you guys have right now at this point in time?
So we are running over 12. There's different portfolios and size of portfolio, but yes, with our group, man, this thing has grown very quickly.
How many doors do you have total?
So we're over 2,000 doors within the last 3.5 years.
Wow. These are new terms for me, guys. I still consider myself a real estate rookie. I joined Janice Club last year. She does a conference every year called ConnectCon, where we connect business owners with investors or investment opportunities. And so it's education. Grant Cardone has been one of the speakers, Elena Cardone, Sharon Lecter. Who are some of the other speakers that you've had or topics?
Yeah, Elena's been there. We've had people that are specialized knowledge. Our brokers come in. We have the founder of Nextdoor and Nertolia. Just unbelievable rock stars in their own industries or well-known names.
Yeah, because it's not just like, oh, we're going to go out and buy a building. There's lots of things that have to be covered and that we have to know about. But let's start with, I'm going to go all the way to the beginning, and then I'm going to let you take it as far as you want to take it in the amount of time that we have. When I say beginning, who are your partners and investors? Are they business owners? Are they W-2s? Or like, who would be interested in this?
Yeah, it really is everyone. I think anyone that's looking for legacy wealth, they're looking to maybe get if they're a business owner, getting their money right and getting it working for them outside their business in case they decide to sell or that's nothing that they want to keep doing forever. Now they have this next level play. We have a lot of doctors. We also have a lot of people that are, W-2 and where it's Jody, like he's a programmer, right? We have people that have either come as a realtor working on residential, and now they wised up and they've moved to multifamily and multiplied their efforts. So it really, Kim, is a plethora of people that we all collide when it comes to legacy play and building multiple streams of income, not having one main income stream. How do we multiply that? One slows down or stops, it's okay.
All right. It's basically just people who maybe do have some kind of legacy thing that they want to leave for their family, but it sounds like they really want to use money more wisely, or they want to like let money do its thing instead of them being the worker and the only stream of income. Because a lot of people think they're going to get wealthy through working, right?
Yeah.
That's where I started.
Yeah, you and I, or small town USA, right? So we probably had our parents, grandparents, hard workers and model in front of us. If you want it done right, do it yourself, save the money. All of the things that we have learned since then may not be the best path forward. So for most people, I think we have been trained that if you want money, you have to go do it with and work, toil, right? Instead of invest. And wait a minute, I don't have to pay attention to it, or I don't have to make sure that everything is okay. I can actually trust partners to do that. So this is the cool thing about investing is you're trading $1 for 2 or 3 or 4. You're multiplying your money instead of your efforts.
I love that. So here's a question that when I'm talking to someone about investing or investing in real estate specifically as a rookie, that I will hear them say, and I'd like to hear your take on it. And that is about single family versus multifamily. We're in Grant's community, and so there's a lot of real estate talk in the community. And I often meet new people on the block coming in for the first time. And they understand that he's saying, buy these properties that you're going to rent, or it's not what he's saying. So for those people who think that they need to go buy 12 homes and then rent them out. How would you describe the difference? Like, what is it that they don't know that you could simplify and make it make sense?
I think for over the years, we have been taught, right, go buy your home, live in your home. And for some people, they're like, you know what? My home is multiplied in dollars and appreciated. Let me go buy a rental home. Let me go fix and flip a home. So that kind of becomes their next level of one home at a time. It's kind of like addition. Very few people know what you and I know, Kim, and that is we can go buy apartment complexes. A certain amount of doors makes it make sense. And now we can have one close with 100 homes in one location. We actually buy the block. What that does for us that we now have unlocked, and thanks to Grant, he's really shown us the path to this that we've implemented. We've been really good students, is that we now are buying businesses in the form of an apartment complex or multifamily other than buying one house at a time that we make. You go from 100% occupancy with one tenant to zero overnight. And if one person moves out of the 100 doors, guess what? We're still okay. So we have spent a ton of money learning about this submarket in real estate, and it's paid off dramatically. So we're just excited to have this information, and we're here to share it as well.
Yeah. So I listened for, I guess, 2, 3, and maybe 3 years and kept hearing like everyone in the room being excited. And every time Grant's like, how many of you are getting a check from me every month? And these people are all raising their hands. I couldn't make sense of it. And I'm going to tell you why. When I would take $50,000 and I would buy something in my business, I would get my money back time and time. Like if I bought a tanning bed, if I bought exercise equipment, if I bought pedicure chairs, I mean, I was just getting way more return on that. So it didn't entice me. I was like, yeah, why would I give them all my money for that little percentage? But it's because I couldn't see the benefits.
Yeah.
I couldn't
So
see,
many layers.
yeah, I couldn't see any of that. And I think that's the misconception about helping people to see why this is like
Mhm.
such an incredible opportunity. And for me, it was I had a new problem to solve. First, as a business owner, you're just getting enough revenue to get your money back and then paying out expenses. But then at the end of the year, if you have a lot of extra money, you've got to give a big portion of that up. And so I got in this trap where every year I was reinvesting to the point to where I bought like treadmills and then the next year treadmills again. Like not to have the penalty, I'll call it. And it just wasn't making sense after many years. Like, why? It felt like I was throwing money because I was now rationalizing or justifying the way I was purchasing by the savings I was going to make. I was like, oh, well, let me buy it. It's a 30 to 40% discount. Did you think that way, or am I the only crazy person who thought
Oh,
that
I
way?
think that most business owners are thinking that way. And I think most people that are even W-2s, they're employees, they're like, I have now a big tax bill at the end of the year. I mean, how am I going to write this off? How can I take advantage of this? I pay tax on my house, pay taxes in other ways. And actually, these properties pay taxes, by the way, but it allows us as now owners in these assets to have some write-offs. And I know that's what you are looking for. People have an income problem, they need more write-offs. So that is definitely a different layer of advantages. You know, when you mentioned the tanning bed and the chairs and all of that, and you were like, I thought ROI faster, then maybe I'm seeing when I go plant my money and let it grow over in these other sectors. You had all the work and the headache and the heartache to get that equipment in motion and now drum up new business. Well, that was work, that was toil instead of, hey, let's go now plant this and have some new benefits so I don't have to go keep buying exercise equipment.
Yeah, well, and I didn't even see it as a problem until
Yeah,
even after that, I still had the same cash problem, the same money problem. And then
right.
so finally one day it made sense. And you might be able to speak better to this than me, but it's when we say it's layers of investment, the way that it pays back, the way that it comes back. Do you want to speak to that? So it's not just cash flow, which just so you guys know, I am like addicted to this cash flow now. Everything I do every day. I'm like, how can I put more in so that I can get this much back so that I can when I'm ready for a vehicle, I'm not going to buy the vehicle. The cash flow is going to buy the vehicle. We didn't even
Right.
know that was possible, even though we heard it. We
Mhm.
really didn't understand it until my husband bought a truck that was not tax deductible. Like, it wasn't anything we were gonna be able to write off, and I was like, "Oh, man, this sucks." And then he said, "Hey, I'm just gonna take that check and pay that," and I was like, "Oh my god, we're doing what they said."
Yeah, it's so true. And it really is about making money work for you than you working for money. And so there's different leverages, there's different secrets, there's the wealthy play. And so it's getting that money and not thinking $1 at a time back to addition, but how do we multiply the money? So people, if they say, okay, there is by the way, this is you know this, we like to refer this as a team sport. And so pick your favorite sports analogy that's a team. We're not playing golf, we're playing football, let's say. And so you have the fans in the stand that are understanding the game, but they're not on the field. They just want to come, have fun, pay attention, and cheer on the team, right? So they want to score. That's where a lot of people want to sit is in the stands and they just want to get their 50,000, their 100,000 into a game like multifamily that they have to get to pay attention to and just watch it multiply, watch that scoreboard go up. They're going to get a drip back from that might be a monthly or a quarterly payback of their initial investment. And it's all projected returns. If you are seeing a savvy question for someone that may be investing for the first time as a fan in the stand or LP, limited partner, is just saying, hey, how many games have you guys played? Well, what are the projected returns? Is this a 6%, a 7%, an 8%? And then when do those distributions start? When can I expect that? Because guess what? $50,000 at 6% annually, right, is going to pay you back at that return at $250 a month. So if I can invest 100,000, $500 a month is coming back. That can help me pay for a car payment. So back to your husband, you're saying, all right, we want to start offsetting some of these bills with passive income. We're not working for that money anymore. It's working for us. People don't get excited about 6%. But what they do get excited about are all of the other things, bonus depreciation, being able to remember, first starts paying the money back. And typically these properties are double the investment time. Maybe we refi these assets. We don't hold these for 30 years. We hold them for maybe 5 years, 7 years, 10 years. But maybe year 3 or 4, it's time to refi. We've added so much value and we pay back those initial investments and maybe more some. It just depends on the market. It depends on interest rates. There's so much to this game and people call it mitigated risk because it's investments, not stock market. That's just paper. It's literally real assets. You drive by and you say, I own a piece of that building. Pretty cool.
I love it. And that's really what impressed me was the different tiers. Because once I understood what you just said about refinance and getting that back, that's the part I was missing, just so you know. So if you
Yeah.
wanna dial in on that a little bit more, just for the person because when we hear something for the first time and don't know what it means, our brain literally checks out. So what she just said is there are multiple ways that you get your investment back. So if you put 100,000 in, you can expect there's no guarantee, guys. This is like investments, but you can expect approximately $500 of cash flow per 100,000 in. So if you were investing 1 million, you're looking at about $5,000 a month, which could replace your income.
Yep.
Then we put so much value into these businesses that we're calling multifamily real estate that the value goes up, the note goes down, and then we can go to the bank and we can get a loan on for that asset for the equity, and we take that money and give their investments or part of
Yep.
their investments back. So imagine we're like, wow, we put so much more value into this. We can go to the bank.
Yeah.
Maybe you'll get 80,000 of your 100 back and you're still in the deal. She didn't say
And it's a non taxable
tax.
event.
So I want to say that clearly because this was the selling point for me. This is when I crossed over. And so Jana's not a newbie anymore, and I think sometimes you guys are so elevated, y'all forget, like, these little people who had to hear this 12, 13 times. So 100,000 in, say it 3, 4 years later, they put debt, and I get 70 to 80,000 of my 100 back. I'm still getting the monthly cash flow. It's a non-tax event. So I'm still getting every single month. Plus that money that I just got back, guess what I'm doing with it? I'm going to go put it in another property. And so now that first investment that I got it poured back, plus that I put in another, I'm now getting double cash flow, non-tax event.
It's amazing. It really is. It's like the layers that you start unlocking. And I didn't know, number one, that this was a 3-year play. Start getting in deals, right? And we call them deals for slang, like they're apartment complexes and investments. You are a partner, by the way. You own a piece of that building with us. This is not like you were borrowing your money and we're going to pay you back and you loaned it. You are a partner. We invest our own money in the fans in the stand as well. Kim and I had chosen to get on the field and actually help these properties appreciate, which you talked about organically. They should double in value over 10 years. So imagine your salon, my staging and design company, whatever the value is, it has doubled in 10 years, right? Without us doing a lot of work. But now imagine your business being worth $10 million and your business is worth 20, mine's worth 10, and it doubled. You went from to $40 million in value and didn't really have to work it. I'd be like, come on, all day long, let's go. Because who's paying these loans off is the renters. It's cash flowing. It has clients, it has customers called your tenants or your residents. We like to call residents. It feels a little better. And it's just great to see that this is a true business that is already, we bought a business, we didn't build a business. If we're in development, we got to build that from scratch. We want to buy a business that already is proven in its financials, that it works, it's a good model, it cash flows day one, all the things Grant teaches us. Now we go multiply our efforts, your marketing skills, your sales skills, my marketing skills, my design skills, pretty for profit. We go add our massive, amazing talents to this, and it appreciates even more. Can we have one asset that appreciated and doubled in 2 years? Ready for refi, just waiting around for these interest rates to keep going down. We're going to cash back 100% and more of the money of our initial investors, and they're still in the deal. Non-taxable event. They'll go do other deals with that money or pay off whatever they want to pay off. And it's about how many properties. It's a buffet. You want to create a portfolio. And once you've unlocked how this works, the rest is history. I know for me, my one single aha moment early on in my first ever seminar in 2021 was you control the value of the asset. And I was like, wait a minute, we can take the rents from 1,500 to 1,700 and let's do it. Can I do some math?
Of course.
All right.
That's going to blow your mind, guys. So if you're not paying attention,
So
listen to
yes,
this.
pretend we own 100 units. We all invested in one. We all own one asset that's 100 units, $1,500 a month rent. We're going to just bump those rents $200 over 3 years. You think it could be done? One lease at a time. We bumped it up. And so now we've added $200 worth of money to 100 units. Okay. So we have $20,000 every month of new money. So now we're going to go times 12 and we're going to get an annual number. We've added $240,000 of new money. We did not do anything but just organically bump the rents, right? As we had new tenants and everything else. So side note, asterisk, we buy assets that are below market value. So we could go in day one and as new leases start turning, dump those rents. We typically don't. Grant teaches us that you shouldn't have to. It's only because you want to. We take that $240,000 of new money, and then we divide it by something called a cap rate. That's basically a rate of return. Let's pretend we're at a 6% cap. We just added $4 million of new money to that property. And this is one way that we increase the value of the asset. Another way, maybe we start charging for parking just a little bit more, start charging for pets just a little bit more. That every property can, just like a business, should have at least 10 different income streams.
That is what I fell for, by the way. My brain, it's just a negative Nelly from the start. So it's always finding problems and loving to solve them. When you said that, we're like, we're buying businesses. So the entire apartment complex is a business, and we're looking for 10 sources of revenue. Like, and most just have not optimized. They've been owned forever. They haven't changed anything. We go in and start improving it. And naturally, just with time, we raise, just like we weren't paying what we pay for eggs 30 years ago. It's just naturally it's going to do. But when we can do something and be in control and add something intentional, and someone wants private parking or covered parking, or they want someone to pick up their garbage every day because they don't want to take it.
Valet trash.
These are services that
Yes.
we can offer
Yeah,
that people with money, that's what they want to pay
yeah,
for.
they'll pay an extra $35 a month. For the latest little income stream, we were at 10X Las Olas. They've added a lifestyle fee. What the heck's a lifestyle? It's all made up, right? You want to use the gym, you want to use the pool. It's like the use of space. Not everybody wants to use the gym, right? They have a membership, but you want to? Okay, that's an extra $45 a month,
What
right?
I
Still
love
cheap.
about that
Yeah.
is that what I love about that is not everybody's gonna wanna do it, which means it's more pleasant.
And it's less use, like Grant says. That equipment lasts longer because you don't have a bunch of people using it around the clock. So super cool. This is so fun because you're a business owner. You love business. I'm a business owner. I love business. So we get to now get our hands dirty on the football field and get in this business and say, what's working? What can we improve? And then what can we do to add new income streams to this asset? We analyze it before we buy it. We underwrite it. We see the opportunities. And when we say thumbs up, go, we get it for the best price and we elevate it and we make sure it's an irreplaceable asset.
Yeah. And it was super fun to go tour the properties. That's something I want to do more of. I was able to, I think, go to 3 so far, and I was like, "Okay, I need to make time to like, I'm going every single month to look at it," because you learn so much more from every property that you go to. There you get to see how management is behaving,
Mhm.
it's like, "Oh, is this somebody," like, if they've been running it that way for 10 years and we come in and we want it to be run different, is that gonna be an issue? There's, like, things to look for that you don't think about from the outside, but once you're in the game and you're seeing all the moving pieces, it's very exciting. Let's
Yeah.
talk about red flags. So if someone they're listening to this and they're like, "Oh my god, my neighbor was talking about doing this." What should they look for to be careful about?
Let's go back to the football analogy, right? You want to look for people that have actually played. We're playing professional. It's not pee wee league. We are playing a professional game, multiple millions of dollars. We better be pros. And maybe we're pros in other fields and we've walked onto the field, but somebody needs to be a veteran. Somebody can be a rookie and we all teach and train and grow together. So that's number one. How many deals have you done? Like you just asked me. You want to make sure that these people are veterans and also that they're going to stay in communication with you and at least on a monthly basis. Hey, here's how the property's doing. Make sure that they are very clear on their projected returns when that money starts coming back to you and they're communicating if something didn't work out as planned. We have properties that for sure pay early and we have some that have started paying late because we didn't anticipate that we had something happen down the street that cut out the electricity on the asset. And so it was a massive generator. Things happen on the properties. You don't have to take care of them, but somebody does. And they communicate, hey, guys, we have a little bit of a challenge, but here's the good news. Here's how we're working it out. You want people that are going to be open and real and transparent as the people on the football field with you. You want people that are going to give you opportunities. Ideally, you invest with them and you come back and invest. And if you ever have the opportunity to get on the field with them, they're going to teach you how to do it and what they've learned. So I just look for investment opportunities, Kim. My very first LPs, I'm like, who do I want to partner with and ride a long game with? And so that was Grant. And then it was also some couples that were able to just help us grow and know the knowledge. And that propelled us to even doing our own deals, which was fantastic. And we're just super excited.
Yeah. So what I hear you saying is making sure that they already have done some deals. You don't want someone who
Hmm.
just got this great idea. They saw Grant on YouTube and then they just go and try to take it down without knowing. The other thing that I noticed with you, with us, and what we're doing is you want to know they have a team. We
Yes.
have taxes and legal and like we've just got a team of resources that cover all the bases. And I'm sure you had to learn this over time, things that were missing. And, it's like, oh, we really need this professional to be a part of it. But now we have a fully built out team. We have veterans. I say I'm a rookie, guys, but I'm 3.5 years that I have been just consuming, but I'm a rookie on the field.
Yeah.
Like actually go and take down a property by myself, or even with people might say my family. I'm over 3 years in. I don't feel like I'm qualified. I don't know enough. I'm learning every week. So make sure that they're not someone who's just energized and money hungry about like, hey, we're going to go and we're
Right.
going to make all this money and don't know these things. The other thing is making sure communication. I know we do regular calls and updates on every property. We know what's going on. Everyone who's invested knows what's going on and opportunities you're looking for, which you offer this too. Can we grow with them or am I always going to be an LP? Is there an opportunity for GP? I like to be involved with what I'm involved in. I like being in the stands and throwing cheers every once in a while. But at this point in my life, I realized I have empty nest of grandchildren. I didn't even know that was
Mhm.
a thing, but my kids are now best friends with their kids. And so we're not best friends with our kids anymore because they're I was like, that's what's missing. This is what's
Right.
happening. They're doing, so there's this point where I'm just like,
And you're in a season of life that
yeah,
makes sense. You've got some opportunity. And I'm going to add, and it's probably a bullet on the first one, but your right team is going to pick assets in the right markets at the right price. But you don't have to know all of that. It's really trusting that the team has done their due diligence and their homework in good markets that go where bodies flow. There's a lot of behind the scenes, as you said. The reps are the legal team. They keep us in line, SEC attorneys. All of those things are part of the game, but trusting a team is invaluable.
can't do it without. There's
Now,
no, you can take down 20, 30, 40, $50 million property. There's no way that you can
I
do.
wouldn't want to. If I knew
Oh,
every piece of it, even Grant doesn't do it by himself. You've seen his team. You've seen whatever floor they're on in the high rise. And all they have asset management. They have it all. They're just an in-house team.
guys, you can tell I am super excited about this. I'm doing this because I want more people to know about it because we're looking for partners. If you're not in the position where you're like trying to figure out where to put this money at, then we could help you create more revenue and actually create a business that can run without you. So it's like this is part of an entire ecosystem from let's make more money together and then let's take down properties in places that are booming. Jana's in Dallas. I've
Yeah.
driven to Dallas a couple of times and done some events there. We have a monthly meetup invited to anyone. You could just show up and just come and ask questions if you're in that area or if you want to drive in and just learn about more about this. Maybe you'll want to become a part of it, but it's a little bit too soon. The other thing is if you come into our educational program, then there is opportunity for you to get on the field. But what if you want to go back to your own state and do your own deals? There's nothing stopping you from doing that.
Absolutely.
Like, so it could go either way. You're not necessarily just like it's not Jana's like the ultimate finder. We're all
Yep.
finders. So if you're
Yes.
coming to Pennsylvania and if you're in this community with us and you're like, hey, I found this, then whoever's in the community who wants to go in with you, it's supported by all of us, just the way Grant is supporting what we take down. We don't do anything without Grant's approval.
That's right. He looks at all of our deals and he has poo-poo deals too. He's been like, don't do that deal. That doesn't make sense. He sees blind spot, maybe. That's the beauty of a community, Cam, that you and I have been a part of forever. We've learned so much just by them modeling. And that's what we are, Model Investor Alliance. We're going to model investing. We're going to create an alliance, a group of people that are all on the same page and are going off the same playbook. We can't get on the field and now we all have different plays we're running. That property is going to be chaos. Can you imagine? Because we all have to get on the same page. So that's what programs and things that Grant is doing. We all get on the same page. We know what we're looking for. We have blinders on. We know when we see a good deal and we know when to walk away from a bad deal.
So the last thing I'll add to it is just the giving back, and that's beautifying the
Mm.
properties, improving. This is not just about those tenants or our property. This is about the world at whole,
Yes.
everything, like humanity in general. It's our giving back. And
Yeah.
so
So we have impact days, right? And so I like got the improvement aspect to it. And it also lets us help impact the residents that are on the property. We may go periodically and cook hot dogs and plant flowers and do something that is a promote of just adding to that community aspect because people will stay if they feel like there are roots at a property and they feel like there's a reason to stay. Their friends are down the hall or next door, and their kids have friends, and the property management who's on site running all this for us, by the way, on the day-to-day operation. It just is a great feel. We don't come in and announce, hey, we're the owners in town. No, we're like, we're investors in this asset because that's exactly what we are. We invest together. We are partners together, and so when we can also help benefit some other causes from our returns, we take a slight portion and we also help build community in other places and with other financial literacy. So that's a big part of what we do. It's a big part of what you stand for. And it's nice to use these assets to be able to give back.
is there anything I did not ask you about that you want to offer to anyone who, whether they're seasoned or not in real estate, maybe
Yeah.
they're just interested? What would we do first? Would you invite them to come to one of your
Yeah.
online things, to come to a workshop? There's a conference happening every year in
November.
November. Uh,
Yes.
yeah.
ConnectCon. I mean, you guys can check out every year we do ConnectCon 2025, 2026. So just check it out. It's going to always be in our Dallas market. But I would say one of our number one rules that we follow is show up. So if you're interested, show up to a meetup. You can go to Model Investor Alliance, modelinvestoralliance.com. Check out what's happening with free resources there. We have our meetups. Just start learning. Go, what do you call it? Where you just binge. You go binge Grant on YouTube on anything multifamily investing or real estate investing. Come to a seminar and sit next to us, like learn how we're learning. And then, of course, if you ever want to be a GP, there's like an incubator process. Nobody goes from the stand onto the field without training. And because people are trusting us with their money and multiple millions of dollars. And so we got to make the right moves for sure.
I just had another question that came up. So the difference between, so what Grant's doing is these huge A assets. And what we're doing is a little bit different. So you want to just speak, because we're in both. We support Grant, we support Cardone Capital, we
Yep.
support the Grant Cardone Foundation. That's the part of the resources goes back to that for financial literacy for the youth. And then this is a little bit different in the way that would you say it's the experience piece? Like we
Yeah.
actually,
It
you can come down from the bleachers and scope in, where Grant's like, I will take it. I will take care of it. I'm good. And so how would you say that in your own words?
Yeah, so I would say difference. He started out in more value add assets, which are like 80s assets. Then you get up into the newer assets built in the 20s. Those are more what he's buying now, big doors, massive $100 million assets. And what we have decided to do is to start out a little bit like he did, where we're getting into the value add and it's called forced appreciation. So we go make changes and then people go from $1,500 a month to $1,700 because they want the newer, nicer stuff in their unit. Sometimes we find it, we don't have to do anything. We get that 200, but maybe we do something and we can get 400. That's huge. So we like a portfolio of assets, a little bit of A, a little bit of B, And we'll do some C plus assets as well that are massive value add. They may have been built in the 70s, 80s. Every property, we're just stress testing what makes sense in this market and what do we want to take down next. All the way from 320 units to 44 units, going from a 6.9 was our lowest, 63 units, all the way up to our last two deals we closed at 41 and a half with two assets, 339 units. They were kind of sister properties. So this keeps getting bigger. We just walked a downtown high rise yesterday. That's right at 50 million. There's one that they want us to put an offer in. We talked to the broker today on Dallas North Tollway at 48 million. So it's great. Don't let the numbers scare you. It's all about scale. Back to Kim saying you don't do this by yourself.
I want to thank you, and I hope we pique some curiosity to those who are listening. If you have any questions, I'll have links. You're welcome to come to anything that we do. Reach out to Jana or I. I'll put all of her information below, same as mine. And that's what I got for you this week, guys. We just want to start showing you different ways to teach your money how to make money. Like basically, we want to, Bob Proctor says, you work for fulfillment and you invest for wealth. Your money makes money, but your time and energy is you giving back. That's something that's pleasing. It's just in service. And I really like that. I've also heard send your money out to bring friends back.
Right.
Bring friends home.
Bring a
And-
friend back, have babies, do something, multiply some way.
Thanks for listening to this episode of More Than Mindset.